This content is for educational and entertainment purposes only. It does not constitute investment advice.
Trading has been around for centuries, from merchants shouting bids in ancient marketplaces to the first stock exchanges in Amsterdam in the 1600s, all the way to the floor of the New York Stock Exchange. Trading has always revolved around one thing: price. How much does it cost to buy? How much are you willing to sell? And for hundreds of years, that was the only thing that mattered. But in every market, there's always been one constant: competition. Every trader, from the merchants in crowded bazaars to the brokers on Wall Street, has always looked for an edge, something the others didn't see, a signal, a clue, a way to tilt the odds in their favor. And yet for centuries, nearly everyone stared at the exact same thing: the final price of the day. They were all playing the same game with the same single piece of information, but there was always something missing that legendary price action traders didn't realize. You see, price tells you where the market moved, but it doesn't tell you how strong that move really is. A sharp rally and a weak drift upward could look identical, even though one was driven by real conviction and the other by hesitation. Despite this limitation, the giants of trading built their empires on price action alone. Men like Daniel Drew and Jay Gould in the 1800s cornered markets and made fortunes just by reading price. And Jesse Livermore, the boy plunger, became a legend in the early 1900s by mastering the art of tape reading, relying entirely on price to make, and sometimes lose, his fortune. But while most traders obsessed over price, there was a quieter figure working in the background. He wasn't cornering railroads like Jay Gould or making headlines with spectacular wins and losses like Jesse Livermore. Instead, he was studying the markets in a completely different way, leveraging new technology, searching for clues beyond the tape, and building an entirely new dimension of technical analysis. For years, his discoveries remained largely hidden, shaping his own success behind the scenes. But in 1907, that figure finally stepped out of the shadows. His name? Richard Wyckoff. And through the magazine of Wall Street, he began sharing his radical idea with the public that price was only half the story. The other half was volume, the invisible force that revealed whether a move had real strength or was just smoke and mirrors. You see, Wyckoff didn't just say that volume mattered. He showed how it mattered. He introduced the idea that markets move in cycles of accumulation and distribution, that when price rises with heavy volume, it's a sign of strong demand, but when price only drifts higher on weak volume, it's often just a trap. He taught traders to look for confirmation. Was the market rallying on real buying power, or simply floating upward on a lack of sellers? Was a sell-off fueled by panic and heavy unloading, or just a light pullback? And for the first time ever, traders could go beyond the surface of a candlestick and actually measure conviction. Wyckoff turned volume into a lens, a way of seeing the hidden intentions behind price movement. But Wyckoff's ideas were only the beginning, because decades later, in the 1980s, a trader named Peter Steidlmayer pushed the concept even further. He introduced something that would change the trading world forever: market profile, a way to map out not just where price went, but where trading activity was actually concentrated. And for the first time, traders could see a distribution of trades across price levels, revealing which prices attracted real participation and which were just fleeting moves. Over time, this evolved into volume profile, which replaced the time of regular market profiles with raw volume. And suddenly, you could see exactly how much buying and selling stacked up at each price. And entire heat maps of market activity came to life. These tools gave traders a dimension Wyckoff could only dream of. Not just the path of price, but the full texture of trading inside of it. And with the rapid advance of technology, all the way up until the current day, analytical platforms all around the world began building volume tools that would have blown Wyckoff's mind. From footprint charts to delta bars to colorful heat maps layered directly on top of price. Traders today have access to insights that early pioneers could never have imagined. These tools would have blown Wyckoff's mind, but you know what would have blown it even more? The fact that you can subscribe to the channel, like this video, and comment your thoughts if you're enjoying the story so far, all in one click. Now that's volume. Now here's the problem today. Most volume profiling tools zoom out. Market profile, volume profile, heat maps, they map entire sessions or even days. And although they're extremely powerful, they rarely zoom into the smallest unit of trading, the individual candle. And yet, that's where most traders make their decisions. One candle, one pattern, one signal. And the irony is that the exact tools designed to reveal conviction often skip over the very building blocks of the chart itself. Here's a perfect example. A standard volume profile like this one shows me where the highest concentration of volume occurred across a range. You can see the distribution on the left side, and even the point of control, with the heaviest volume activity across the entire session. That's useful. But what's missing is the individual candle information. Did volume cluster at the top of the bar, at the bottom, or was it mostly buying or selling? That's the kind of detail that can help me judge whether we're hitting a bottom, topping out, or setting up for a reversal. But a session-wide profile can't tell me that, and that's the trap I've been falling into, relying on tools that zoom out, when what I really needed was a way to zoom in. So here's the thing. We've built footprint tools before. We've built volume delta indicators, order flow studies, and other advanced profile. And while all of these tools are immensely powerful, there's one huge problem that can't be overlooked. Tools like this require a lot of experience to use. You need to understand order flow theory, bid-ask dynamics, absorption, imbalance, and it's not exactly beginner friendly. But what about the trader who just wants a clear, simple way to peek inside the candle? No deep order flow training, no months of study, just an intuitive view of where volume really stacked up. After several tireless nights of study and development, we knew this couldn't just be another volume profile. You see, the problem with standard volume profiles is that they don't emphasize high volume areas proportionately on a candle by candle basis. A weak pocket of activity can look similar to a zone with normal activity, and that's what we set out to fix. And that's why we created CandleHeat IQ. Before we move further, a quick heads up. CandleHeat IQ is a trading view indicator that's unlocked through our affiliate program. If you use the links in the description, we may earn a commission. You can check the description for all the details on the current campaign. And just so you know, the program and its terms can change over time, so always review the latest info in the link below. It takes the concepts of footprints and distills it down into something traders of any skill level can instantly pick up and understand. One look at a candle and you can instantly see whether the battle was won at the bottom, the top, or somewhere in between. All right, enough theory. It's time to get practical, and I want to show you exactly how CandleHeat IQ works and how I use it to spot signals that normal charts completely miss. Now, there are two primary ways to use CandleHeat IQ: total volume and buy/sell volume. Both have their own advantages, and we're going to start by explaining the total volume feature. The total volume feature divides each candlestick into 12 blocks, with the total volume at each section of the bar being recorded and turned into a color gradient. For my chart, high volume is colored aqua and low volume is colored purple. And this feature alone allows me to spot volume-based insights without the mess and headache of traditional volume profiles. Now, the primary way I use this feature is to spot exactly where buyers or sellers stepped in to halt a trend. Let me show you what I mean. Check out this downtrend we have here on my price chart. Now we can see that this candlestick marked the stoppage point of the downtrend. And if we take a look at the bottom section of this candlestick, we can see extremely bright aqua shading, which indicates that there was very high volume at the bottom of this candlestick that halted the downtrend. And what I've noticed frequently in my own trading and for my own analysis, is that this identified volume-based zone can function as a future support level going forward, because this zone marks the area where buyers were most interested to buy the asset at lower prices following the downtrend. Or with an uptrend, I use CandleHeat IQ to see the exact zone where sellers were most interested in going short at the top of the uptrend. And having this information can help me spot volume-based support and resistance opportunities that I would normally miss, because without volume, traders generally just mark the high of an uptrend or the low of a downtrend as future support or resistance. But this method of support and resistance completely misses out on volume-based context. More advanced users can even switch the view to show total volume within each candle section, or layer on a heat map that highlights not only the hot zones inside of each candle, but also the broader price levels, where volume has historically concentrated, with green levels marking high volume zones and purple levels marking low volume zones. Now, total volume already gives me powerful clues about where conviction stacked up, but sometimes I want to take it a step further, because it's one thing to know where there was heavy volume, and it's another to know who was behind it. That's where the buy-sell volume feature comes in. Instead of just showing raw volume, it breaks down the directional flow, highlighting whether buyers or sellers dominated inside each section of the candle. And that's incredibly useful when I want to see if a trend is being driven by real buying strength or if selling pressure is quietly building underneath the surface. And of course, this feature also makes use of the heat map, where we can see overarching price zones that were historically controlled by buyers and overarching price zones that were historically controlled by sellers. And this helps me find major support and resistance levels going forward. Quick disclaimer before I show you this: nothing in this video is financial advice. I'm just walking you through how I personally use this tool in my own trading. And by using this heat map feature with the buy and sell values, I watch how price reacts at these key zones. For example, if demand is hit, that can signal potential strength. So in my own testing, I've marked it as a spot where I might look for a long position with a stop at the bottom of the zone. And if supply is hit, I might treat it as a shorting area with a stop loss placed at the top of the zone. It's just one way I've experimented with applying this tool, and it is not financial advice. I'm only showing you a demonstration of how I've personally been trading and testing this tool. Remember, trading involves risk, and you should always do your own research before making financial decisions. And that's CandleHeat IQ, a simple but powerful way to finally see what's happening inside of each and every candlestick.
Be sure to like, drop a comment, and subscribe with notifications on so you don't miss what's next. And don't forget to follow us on Twitter and TradingView. And check out our Discord server, where we have active traders discussing trading each and every day. Thanks for watching, and I can't wait to see you in the next video.